Now let's talk about the bear run in American markets. It's getting worse. US stocks have been bleeding. We discussed it yesterday. One of the big reasons for this bleed is the growing fear of an AI bubble, the fear that AI stocks are overhyped, that there will be a crash and that investors will lose big money. That concern is growing. Let's break it down for you. Yesterday, Dow Jones was down by more than 1%. The sell-off wiped nearly 500 points off the index. The S&P 500 also fell for a fourth straight session. It fell by nearly 1%. This is the longest slide in 3 months. And leading the slide was big tech. Nvidia dropped nearly 3%, Microsoft another 3%, and Amazon slid by more than 4%. And this came amid a big announcement, by the way. Yesterday, 3 companies announced a big deal: Nvidia, Microsoft, and Anthropic. They announced a $30 billion strategic partnership, $30 billion. Under normal circumstances, it would have been good news and it would have pushed up stock prices. But in this case, the opposite happened. Investors continued selling because they fear that the hype around AI is too much. There's a growing worry that AI stocks are overheating, meaning they're rising too fast, too high, and way beyond what real profits can justify. The Bank of America conducted a survey. It spoke to 172 global fund managers. They were asked one simple question: what is the biggest risk to markets today? That was the question. And guess what? 45% of them said it's the AI bubble. The AI bubble is the biggest risk to markets today. 45% fund managers say that. Last month, 33% held this view. And they're not just expressing concern, they're also acting on it. They're reallocating investments in the US market. They're pulling money away from tech stocks. Allocations to tech companies have hit a 6-month low. So where is the money going? If they're pulling it out of tech, where are they investing? They're investing in sectors like healthcare, banking, and consumer staples. Those investments are rising. That's a sign of a shifting market sentiment. And it's not just about valuations or pricing. Investors are looking at fundamentals. Here's what they're worried about: capital expenditure on AI. What does that mean? The spending on long-term assets. And what are those long-term assets for AI and tech companies? What is their capital expenditure? It's spending on computer hardware like chips, data centers and infrastructure, and electrical systems. Basically, any money spent on building infrastructure that you need to scale up AI models. Investors are now worried about this expense. Fund managers say companies are quote-unquote over-investing. Bank of America calls it the hyperscaler problem, meaning there is too much cash, too much infrastructure, and companies are scaling up too fast. Tech firms are pouring billions into AI, but the returns are still unclear. This is especially true for 3 kinds of companies: chip makers, providers of cloud computing, and startups riding the AI wave. Investors are worried about the return on this investment. When will all this spending pay off? That's the question they're asking. And that is why experts are calling it an AI bubble. So what happens next? How and when could this AI bubble burst? There are 3 possible scenarios. First, if the earnings disappoint, if companies like Nvidia fail to deliver, if their profits fall short, if growth slows or profit margins shrink, then it will deflate the hype. The second scenario is a demand mismatch. AI chips are at the center of this boom. Every company scaling AI needs special chips. But those chips come at a cost. They're expensive to make, even more expensive to buy. For now, their demand is strong, but what happens if the demand drops? What if supply outpaces demand? A glut of chips could drive prices down, and that would hit a company's bottom line hard, especially for chip makers banking on the promise of expansion. It would signal the end of the AI bull run. That's the second scenario. Third scenario, if innovation starts to slow. So far, we've seen rapid progress, but every new model is delivering smaller upgrades. They have smarter prompts, they have faster outputs, but they have no major breakthroughs. Meanwhile, expectations are still rising. AI was sold as revolutionary technology, a force that will transform everything. It was supposed to automate jobs, reshape entire industries, replace humans. That has not happened yet. Yes, there is disruption in the job market, but it's not as bad or as wide as was feared. Basically, there is no big leap that justifies the trillion-dollar valuations. If progress stalls, or if the pace of development slows, investors will start to question the hype. Because this is what makes this bubble different. It is built on a belief, a thought, that AI will transform the world and pay off massively. But belief does not balance company books. When the numbers do not add up, the sentiment shifts. Yes, the AI boom has delivered real gains. It has pushed markets to record highs. It has created massive momentum. But the danger now lies in the expectation. If results disappoint even slightly, the bubble will begin to deflate. For all you know, that's already happening.
I was a revolutionary. I became a ruler. I claimed to protect my people. I terrorized them instead. I built palaces. I started wars. I lost everything. Some called me a defender of Arab pride. History remembers me as a dictator. Who am